Now, Robinhood to launch 24-hour trading on weekdays in stocks and ETFs. Shout out Investor Turf for stating a disclaimer where they state we strongly discourage the use of Robinhood under any circumstances. In fact, if you currently have an account with them, we highly recommend closing your account and seeking an alternative brokerage, which is absolutely savage. What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Today we are going to be talking about Robinhood's 24-hour trading program that they are about to drop for specific stocks. Following that, we may touch a little bit on GameStop if we do have more time in the video. So without further ado, please hit the like button. It helps me out. Hit the subscribe button. Drop a comment down below what you think about this. Let's get into it. So Robinhood announced Wednesday that next Monday, May 16th, the company will begin allowing users to trade 24 hours a day during the week on some stocks and ETFs. Stocks like Apple and Tesla. The company announced these new trading hours, which will run from 8 a.m. ET on Monday through 8 p.m. ET on Friday alongside its first quarter results Wednesday afternoon. Robinhood will enable around-the-clock trading on more than 40 stocks and ETFs, including names like Apple and Tesla. In quotes, they state, "This is an exciting upgrade to our stock trading product. It allows our customers to better manage their risk and take advantage of opportunities no matter what time of day they arise." Now, I think you all know why they're doing this, and if not, we're going to touch on that in today's video. You see, this is the screen time of somebody about to lose all their money, or at least you can expect that, or you can put a tinfoil hat on. This is just a funny screenshot showing 107 hours and 36 minutes over the past week of somebody staring at their Robinhood account and using up over 100 hours of screen time. There may or may not be no mega mansions for Ken Griffin this quarter, and let me explain why. The monthly active users MAU increased by 400,000 to 11.8 million in Q1 for Robinhood as an app. Now, if you take a look at the chart right here that we have in front of you, this is still a very, very low increase for Robinhood. And if you just take a look at the chart as a whole, Robinhood is not really in the best spot and it's not in the best setup. Now, in the past, they have come out and clearly stated that most of our revenue actually comes from payment for order flow and or pushing crypto meme coins like Doge and SHIB and the way retail actually jumps into those. Now, if you take a step back and realize what's happening with the banking crisis and what's happening overall, it seems as if Robinhood may just be trying to save themselves by screwing over retail once again. You see, Robinhood has quietly become a bank. It makes more money from interest income than from its core business. Total net revenues were $441 million, up 16% sequentially, primarily driven by higher net interest and transaction revenues. You can see 522, 565, 365, 363, 299 being the lowest, 318, 361, 380, and 441. Mostly earning money from interest income than its actual business as a whole. And the reason for this is because they highly engage in payment for order flow. They have had connections to Ken Griffin in the past, and ultimately it's probably the most corrupt broker that you can find. I would highly not recommend Robinhood. I would not vouch for them. None of this is financial advice. Do with it what you will, but exactly like Investor Turf said, this is a very, very dangerous game they're playing. Now, let's actually jump into it. This is what happens during these trading hours. Inability to see or act upon quotes. Some firms only allow investors to view quotes from the one trading system the firm uses for after-hours trading. Okay, lack of liquidity. During regular trading hours, buyers and sellers of most stocks can trade readily with one another. During after-hours, there may be less trading volume for some stocks, making it more difficult to execute some of your trades. Meaning, okay, Robinhood is going to earn more for payment for order flow, which is a benefit to them, and also it's going to allow Citadel and Virtu to continuously route orders and route more orders. It seems like as if it's a two-way path to help out corruption, in my opinion, but that's not all. Larger quote spreads, less trading activity could also mean wider spreads between the bid and ask prices. As a result, you may find it more difficult to get your order executed or to get as favorable price as you could find during regular market hours. So you can already see the excuses coming out where, Citadel is routing these orders, but they are clapping you on the bid-ask spreads. These market makers are clapping retail on the bid-ask spread, and I can see it right now because if Robinhood is the only one using this app and is the most corrupt broker, you can already see where they're going to come from this and blow this out of proportion, stating that, listen, we're the first broker to do this, you might not get the best bid-ask spread. Therefore, you may be paying more for the stock, but you're getting in early. It just doesn't add up, because this doesn't affect still how the market is going to open. You're not going to know if it's going to open red or open green, but you might get a worse bid-ask spread, which essentially is going to make money for Robinhood for payment for order flow, and make money for the market makers for profiting off that spread. So this is pretty straightforward. Also, after hours is biased towards limit orders. However, I'm not sure how Robinhood is going to set this up, where they are going to be able to execute market orders when the market is actually not even open, or this will all be limit orders. Not only that, but this is the main thing I want you to pay attention to: competition with professional traders. Many of the after hours traders are professionals with large institutions such as mutual funds, who may have access to more information than individual investors. Now, you are jumping in a pool of sharks, and you have no idea if any one of these sharks are hungry. This is a problem, right? This is the problem with this 24-hour trading. And of course, it's going to be at your own risk, which of course is going to make Robinhood more money, because more of retail is essentially going to blow up their accounts. They're going to hand money to institutions, and most importantly, they're going to hand money to Robinhood when they blow up their margin accounts. Overall, this is not a good thing. I think Robinhood just absolutely obliterated retail once again, and traders that aren't really advanced traders are going to think this is normal without knowing the market, and it's not a good thing going forward. Overall, this is what I got for the Robinhood situation. If we have time right now, I will keep recording and touch on GameStop. Credit Suisse just filed its updated 13F, showing an increase in GameStop ownership. They are now holding 357,299 shares in the company, which is very, very interesting, and you can see that right here. Credit Suisse files updated 13F, showing an increase in GameStop. Wait, what? But why? If you dig in even further, you're going to see this. Gamers have long memories with Credit Suisse at one bags. Following that up, according to TA Analyst on Twitter, GME got the bullish trigger cross, got an hourly close above $20.90, and yet is still unable to push higher. This is pretty unusual. I'm not quite sure what the answer is, besides probably low volume. Now you take a look at this and say, okay, well, why isn't GameStop breaking above if it has all of these perfect indicators? And you might think this is a bad thing, you might think this is a good thing, and the reason you might think this is actually a good thing is because GameStop trading volume plummets to an 18-year low, which means fewer GameStop shares are trading hands than at any time since 2005. 9 out of 10 of the lowest trading volume has been in the last 30 days. Does this mean DRS is working? You guys let me know in the comments down below. According to Stonko Tracker, currently GameStop has 60% of its float DRS. This number got up to about 66, then dropped to 50, recalibrated, and now it's back up to 60%. And it's interesting to see that the on-balance volume continues to scale up on GameStop. All the fundamentals continue to rise on GameStop as a company, and we continue to have the lowest trading volume ever reported for GameStop. So this is what I got for you guys for today's video. Hopefully you enjoyed watching. Enjoy the rest of your day. As always, have post notifications on, and if you want 10 free AMC stocks and you're from Australia, use my link, download Moomoo, and make a deposit. You're also getting up to 10 more on top of those guaranteed AMC stocks. And if you're in the US or anywhere else around the world, download Moomoo using my link to get up to 20 free stocks, each valued up to $2,000 per stock, so a chance at 40 grand just by signing up, making an account, and making a deposit. That can literally be a penny. Also, guys, if you want options trading alerts, talks with me on the daily, and 500 of the most amazing people, join the Discord. The link is under the video as well. I love you all. Lottery Stocks out.